Hi guys, you're welcome to today's commentary for the dollar and foreign currency. Good morning. If you're watching me, I'd like you to type your name in the comment section and let me know where you're watching me from. Let me know where you're watching me from. Type your name and where you're watching me from in the comment section. Good morning, everybody. I would like you to type your name and where you're watching me from. It's going to be an interesting session today of top-down analysis with me here. All right. Type your name and where you're watching me from. Idris from Kano, thank you for joining me. I can see Gilbert from Kenya, my Kenyan friends, how you doing? Ambrose from Lagos, Moyo from Lagos, nice to connect with you guys this morning. So today we're going to be doing our top-down analysis. Remember I said this year I was going to get more serious with showing you guys my idea about the market all the time before the market plays out, and you're going to be having a lot of access to my video commentary almost every single day right here. I mean, I really understand that a lot of you are passionate about trading and are investing so much to see that they move from being unprofitable to becoming profitable traders. But again, most of you cannot even afford regular mentorship, talk more of premium or advanced mentorship. So this is why we're doing this on the YouTube handle, to also connect with you guys, see how we can carry you all along while we are ready for the big thing in 2025. So usually, remember, we usually would like to check the economic calendar from time to time, if not every other day, to see what is likely going to happen on the fundamentals. All right, so today is Thursday, 23rd of January 2025, and we're looking at the economic calendar on forexfactory.com. And what am I looking for? I'm ruling out market conditions I shouldn't be trading inside. Market conditions like the CPI, FOMC, NFP. These three market conditions comes with a lot of market volatility and speedy price delivery. Most of the times, as a beginner trader, you'll be wrong because you've not settled identifying directional bias, you've not settled strategy. So when you get it wrong and you are in this type of market conditions, you are going to lose a lot of money. Even your stop loss is going to be extended by maybe 10, 20, 30 pips, and you really don't have to put yourself under such emotional dilemma when you can consistently take out something from the market when you have a model that works. Okay, so Thursday, you can see that on the economic calendar we have high impact news on the Canadian dollar on around 2:30 p.m. GMT +1. Then we have a high impact on the United States dollar by 5 p.m., this is around the bond close. So I mean, nobody should be in the market around this time because it's already the close of New York session. Remember, we are only interested in taking trades during the London and the New York session. Okay, so we go back to the dollar index, and remember that we've had a bullish bias on the dollar index. We said it's bullish, and we're looking at the dollar index trading into the dollar liquidity above. But currently the dollar also had created a new shift of structure bullish after price action closed above the last swing high here, the lower high here. Before this lower low, price formed another higher high, so we had a shift of structure, and we were anticipating the dollar to trade into internal range fair value gap on the monthly time frame. All right, on the weekly time frame, we see that price action is already showing that willingness to do that, especially after price traded into the mitigation block right here on the weekly time frame by the left, you see that price from the low high shift of structure. Now we traded back into the mitigation block. All right, we'd like to see it trade into this bullish order block and or the fair value gap on the monthly before the expansion continue into the drawn liquidity above. On the daily time frame, look at what we have on the daily time frame. Let me do this. On the daily time frame, look at what we have. We see the dollar took out liquidity above that high and has just created shift of market structure bearish. Remember, on the daily time frame, we are focusing on market structure. We are focusing on market structure on the daily time frame. So on the daily time frame, price created that shift of structure bearish here, and of course this is bearish mitigation block. Price also traded back into the bearish mitigation block right there, and we would like to see this guy, of course, expand into the drawn liquidity residing below the relative equal lows here that we outlined. Remember, we mentioned that we were looking at the dollar trading into this drawn liquidity. At the beginning of the week, I had done this analysis with you guys in the private mentorship community. Those of you who are taking commentaries from us in the Illustrators program and also on my one-on-one mentorship, you know what I'm talking about. Those of you on YouTube also, of course, I think I've showed you guys that we were anticipating price action to trade into this drawn liquidity, the buy side imbalance, sell side inefficiency residing below the relative equal lows here. This is typical trend line for retail traders. We are looking at this level as diagonal liquidity, as drawn liquidity, and we'd like to see price action trade into that level. Okay, so price had violated even this low. This is shift of structure. You can see the body of the candle. Price had closed below that body of the candle. It is also a bearish breaker. Why? Higher high, shift of structure, price has closed below that. If you take out the candle wicks, you will understand what I'm talking about. Let me see what I can do here. So if you take out the candle wicks, you would see that okay, so let's do this. Let's see. Great. So if you take a look at this, you would see that we just took out the candle wicks, and this is obviously shift of market structure bearish, and this is bearish breaker. So I would like to see price action react from this. This is also previous support turned resistance. Price action will most likely expand lower into this level that we outlined, the breaker or the breaker below here, this bullish breaker here, which will confluence with the fair value on the monthly time frame. Okay, my friends, so let's get back to work. Then on the 1 hour time frame, look at price action at the beginning of the week. Price took out the high, shift of structure, traded back into, great. So price took out the high, shift of structure below, traded back into bearish breaker. We sold, expansion lower. Again on Monday, I already outlined that we wanted to see price action take out that high, then we sold into the drawn liquidity. I already told you guys we're going to see price trade into that relative equal low here. Price expanded into that level during that Trump inauguration. That was the quick reaction, market reaction there. All right, today also I see the dollar selling. All right, why? Price took out the high, shift of structure, left an internal range high there, or we call it intraday high. So price just swept the high there and has traded into an institutional reference point right here. You see that fair value gap, fair value that was violated here, will also serve as support turn resistance. All right, and of course you guys know how to get it right. From this point, we're going to sell into the next drawn liquidity, and we're looking at the old low here, relative lows, all of this. This is where I would like to see the dollar trade into this level. While this is happening, I'm looking to buy Euro USD, I'm looking to buy foreign currency. Okay, so a quick look at foreign currency, Euro USD. A quick look at it. Sorry, my chat looks very choppy. I think I had a session with someone. That's why it's looking like that. All right, so this is the 1 hour of the dollar index. Because I'm about selling the dollar, I'll be willing to buy Euro USD. Why? I see the Euro USD had just traded below that low, Tuesday low. We swept below it, and it's confluencing with a bullish breaker. You guys know what I'm talking about. Confluence with a bullish breaker right there. You see that? This is very good setup. Boom. I'm already buying this. So you buy this, and you're buying into what? You're buying into the drawn liquidity, of course, relatively call high. You're buying into this, you're buying into that. Okay, my friend, this is what I'm looking at on the Euro USD. Very easy, very simple. Remember, the goal is to keep your analysis as simple as possible. The more complicated it is, the more confused, the less profitable you're going to be. Once you keep it complicated, you're going to get confused, you're going to get less profitable. So the goal is keep it simple, less complicated, and you are going to be good. You're going to be good. Less complicated, very easy, and you're going to be good. Okay, my friends. So this is my expectation for Euro USD, my expectation for foreign currency, and the dollar index. Okay. Today I think we will not go through gold, but let me see if there's something on gold for us to go through. Okay, so we took a buy on gold. Remember from our last analysis, gold has been bullish. Let's take a look at the daily to see if we traded into the drawn liquidity. So gold actually traded into that our fair value gap. Interesting. So that means we might see gold trade into internal range fair value gap, which exactly it is doing right now. I'd like to see gold actually trade into this internal range breaker, old high is there, or find support at the old high or the bullish order block. So if the 1 hour time frame creates the signature for us to do that, then we can do that. Otherwise, we'll continue to buy gold. Gold is also sitting at a bullish order block on the 1 hour. Let's take a look at the daily. Gold had traded into a fair value gap. And take a look at this. This is the bearish order block that was violated by the left. Bearish order block that was violated here is going to serve as a support level right here, because it's confluencing with a fair value gap. So on the 1 hour, you can see that at that point there's also a bullish order block. So if we see a 5-minute shift of market structure bullish, I'd like to buy gold. Once I see something like this, I would like to buy gold on the 5 minutes into the drawn liquidity above. Alright, so this is my expectation for gold as well. Man, don't forget to like the video. Don't forget to share this video to someone you would like to learn from me, and also type in the comment section. Let me know what you think about my analysis. Let me know the topics that you would like to learn from me. And those of you looking to join me on one-on-one mentorship, there's a link in the description of the video. You should reach out to my personal assistant. It's going to give you access to my mentorship programs and the offer, and what you're going to benefit from joining me on one-on-one mentorship. And those of you who cannot afford one-on-one mentorship, just keep watching the free YouTube handle. And very soon we are going to reinstate our Elite Traders program, regular mentorship for everybody, where everybody can afford it. Alright, just stay in tune and keep following me, keep sharing my videos. Until next time, I wish you good luck, good trading, stay safe.